Is Warren Buffett sounding the alarm on Wall Street? Warren Buffett just made a historic $127 billion move that could spell trouble for the stock market. And here's the kicker. This isn't just another routine shift in Berkshire Hathaway's portfolio. It's a massive, unprecedented warning that investors can't afford to ignore. Let's break it down. Under Buffett's leadership, Berkshire Hathaway has delivered a mind-blowing 5,500,000% return since the 1960s, outpacing the S&P 500's 10.4% annual gains. He's one of the greatest investors of all time, and when he makes moves, smart investors pay attention. So why did Buffett and his top investment managers, Ted Weschler and Todd Combs, dump a staggering $133 billion in stocks while only buying $6 billion in 2024? That's a net sell-off of $127 billion, the biggest in Berkshire's history. And here's what's even more alarming. They had a record-breaking $325 billion in cash sitting on the balance sheet by the end of Q3. Buffett could have gone on a shopping spree, but he didn't. Right now, the billionaire investor is doing something for the first time in more than 30 years. And it could be a shocking warning for investors. Buffett sees something coming. He knows something Wall Street doesn't. And it lines up with another major red flag. The stock market is overheated. The S&P 500 hit a cyclically adjusted price-to-earnings ratio of 37.9 in December 2024, way above the 20-year average of 27. Historically, these kinds of valuations signal below-average returns, or worse, a potential downturn. What does this mean for the future of the market? Stay tuned as we delve into the implications of Buffett's cautious approach. Now, before we dive in deeper, this video is sponsored by Forecaster Terminal, a tool I've been using to uncover these incredible stocks and financial stories in real time. And honestly, it's been a game-changer for my research. With Forecaster, I can quickly identify value stocks, growth stocks that are ready to break out, and even spot seasonal trends in the market that most investors overlook. I can spot insider transactions in seconds. It also lets me compare companies side by side with their competitors, giving me a full stock analysis instantly. Things that used to take me hours or even days are now done in a matter of seconds thanks to the Forecaster AI agent. Click the link in the description now to try Forecaster Terminal for free and use my code Galore10 to get a 10% discount when you sign up. Don't miss out on this game changer for your portfolio. Buffett's Berkshire Hathaway is sitting on a record $325 billion in cash, a staggering sum that has Wall Street buzzing. This massive cash reserve suggests that Buffett is exercising caution in the current market environment. But what does this mean for everyday investors like you and me? Is Buffett sending a silent signal about an impending market correction, or is he simply biding his time, waiting for the perfect opportunity to deploy his capital? This massive cash pile is a clear indication that he's not seeing a lot of value in the current market. He's famously said, "Be fearful when others are greedy, and greedy when others are fearful." Now back to Buffett's strategy. Right now, the market is experiencing a period of relative growth. Many stocks are performing well and investors are feeling optimistic. Yet amidst this sea of green, Buffett remains cautious, his cash stockpile a stark reminder that appearances can be deceiving. Some analysts speculate that Buffett's cautionary stance stems from concerns about inflation, rising interest rates, and geopolitical instability. Buffett is a long-term investor. His focus is on identifying undervalued companies with strong fundamentals and holding them for the long haul. His massive cash reserves give him the flexibility to act decisively when the right opportunity arises. He can swoop in and make significant investments in undervalued companies or even entire businesses, potentially at bargain prices. Adding another layer to the intrigue, Buffett has been trimming his positions in some of his largest and most successful holdings, including Apple and Bank of America. This move has left many market watchers scratching their heads. Apple, a longtime darling of Wall Street and a significant component of Berkshire Hathaway's portfolio, has seen its share price soar in recent years. Similarly, Bank of America, a stalwart in the financial sector, has also experienced Buffett's recent portfolio adjustments. Could Buffett be sensing a potential slowdown in these sectors, or is he simply rebalancing his portfolio to capitalize on emerging opportunities elsewhere? Buffett's every move is scrutinized by investors around the globe, and his recent actions have only intensified the spotlight. One thing is certain. Buffett's actions serve as a potent reminder that even in a bull market, caution and prudence are essential virtues for any investor. Buffett's recent moves, particularly his reduced stakes in Apple and Bank of America, have indeed sent ripples through the financial world. In the first 3 quarters of the year, he cut the Apple by 67% and the Bank of America by 23%. These actions, coupled with his massive cash reserves, paint a picture of a seasoned investor carefully navigating a complex and potentially volatile market landscape. The reduction in Apple holdings, while significant, doesn't necessarily spell doom and gloom for the tech giant. It's possible that he sees the current valuation of Apple as potentially overextended, prompting him to secure some profits while maintaining a significant stake in the company's long-term prospects. Bank of America presents a similar narrative. While the financial sector has generally benefited from rising interest rates, Buffett's reduction in his Bank of America position could indicate concerns about potential headwinds. His decisions are not driven by short-term market fluctuations, but rather by a deep understanding of a company's fundamentals and its ability to weather economic storms. While Buffett has been trimming his positions in some sectors, he's been strategically increasing his exposure to others, most notably the energy sector. His recent investment in Occidental Petroleum has garnered significant attention, signaling a potential shift in his investment focus. The energy sector, often considered a hedge against inflation, has experienced significant growth in recent years. Factors like geopolitical tensions, supply chain disruptions, and increasing demand have contributed to surging energy prices, making the sector attractive to value investors like Buffett. Buffett's bet on Occidental Petroleum, a company with a strong track record and a focus on traditional energy sources, aligns with his preference for companies with a durable competitive advantage. This move suggests that he sees long-term value in the energy sector, particularly as the world transitions towards renewable energy sources. Recent filings also show that he added to his shares of internet domain registry company VeriSign over the past 2 months. The $325 billion question on everyone's mind is, what's next for Buffett and Berkshire Hathaway? While no one can predict the future with absolute certainty, by analyzing his past moves and understanding his investment philosophy, we can gain valuable insights. One possibility is that Buffett is waiting for a significant market correction. His massive cash reserves would allow him to swoop in and acquire undervalued assets at bargain prices, a strategy he has employed successfully in the past. Another possibility is that he's seeking out private equity investments. With valuations in the public markets potentially stretched, Buffett might be turning his attention to privately held companies where he sees greater value and growth potential. Regardless of his next move, one thing is certain: Warren Buffett's actions will continue to be closely watched by investors worldwide. To truly understand Warren Buffett's latest moves, we need to delve into the core principles that have guided his investment strategy for decades. Buffett is a staunch believer in value investing, a philosophy centered around identifying undervalued companies with strong fundamentals and long-term growth potential. He's not interested in chasing short-term trends or speculating on market sentiment. Instead, he seeks out companies with a durable competitive advantage, often referred to as a moat. This moat, whether it stems from brand recognition, cost advantages, or unique technology, provides a buffer against competition and allows these companies to generate consistent profits over time. Buffett's focus on intrinsic value, a company's true worth based on its assets and future earnings potential, sets him apart from many investors who get caught up in market hype. His recent moves, particularly his increased stake in the energy sector and his reduced positions in Apple and Bank of America, might seem contradictory at first glance. However, upon closer examination, they align perfectly with his value-driven approach. While Buffett is renowned for his large-cap investments in companies like Apple and Bank of America, it's crucial to remember that Berkshire Hathaway's portfolio extends far beyond these well-known names. In fact, some of its most significant holdings lie in lesser-known companies that form the bedrock of its diversified investment strategy. Berkshire Hathaway owns a vast array of businesses, ranging from insurance giants like Geico and General Re, to consumer brands like Duracell, Dairy Queen, and Fruit of the Loom. This diversified approach provides a buffer against market volatility and ensures that Berkshire Hathaway isn't overly reliant on any single sector or company. Buffett's emphasis on diversification underscores a crucial lesson for all investors. Don't put all your eggs in one basket. By spreading your investments across different sectors, industries, and asset classes, you can mitigate risk and potentially enhance your long-term returns. Warren Buffett's every move is scrutinized by investors worldwide, and his recent actions have sparked intense debate about the future direction of the market. While no one, not even the Oracle of Omaha himself, can predict the future with absolute certainty, we can glean valuable insights by carefully analyzing his actions through the lens of his investment philosophy and experience. Buffett's massive cash reserves, his reduced exposure to certain sectors, and his increased stake in the energy sector all point towards a cautious yet opportunistic stance. He's acutely aware of the potential headwinds facing the global economy, including inflation, rising interest rates, and geopolitical uncertainty. However, his cautiousness should not be mistaken for pessimism. Ultimately, Buffett's message is one of prudence and patience. Warren Buffett's recent investment moves have, as expected, ignited a firestorm of debate among Wall Street analysts and financial experts. Some view his cautionary stance as a prudent hedge against potential market turbulence, while others interpret it as a missed opportunity to capitalize on continued growth. Those echoing Buffett's sentiment point to the numerous headwinds facing the global economy, including persistent inflation, rising interest rates, and geopolitical instability. Conversely, those disagreeing with Buffett's current strategy highlight the market's resilience and its ability to overcome challenges. This divergence of opinions underscores the inherent complexity of financial markets and the absence of a one-size-fits-all approach to investing. While Buffett's track record commands respect and attention, it's crucial to remember that even the most successful investors are not infallible. While the debate among experts rages on, everyday investors can glean valuable lessons from Warren Buffett's actions, regardless of whether they agree with his specific investment decisions. One of the most important takeaways is the significance of patience and discipline in investing. Buffett's willingness to hold on to cash, even when the market is surging, demonstrates the importance of sticking to your investment strategy and not getting swept up in short-term market sentiment. Another crucial lesson is the power of diversification. Buffett's vast and varied portfolio, spanning multiple sectors and industries, highlights the importance of spreading risk and not relying too heavily on any single investment. By focusing on a company's intrinsic worth rather than its current market price, investors can potentially uncover hidden gems that the market has overlooked. Navigating the complexities of the financial markets can feel overwhelming, especially in times of uncertainty. However, by embracing the principles that have guided Warren Buffett's success, you can gain a sense of direction and confidence in your investment journey. Start by defining your financial goals and risk tolerance. Are you investing for retirement, a down payment on a house, or your children's education? Knowing your objectives will help you develop a tailored investment strategy that aligns with your needs and timelines. Next, conduct thorough research on potential investments. Consider diversifying your portfolio across different asset classes, sectors, and geographies. And finally, remember that patience is a virtue in investing. If you're serious about finding those winning stocks, those hidden gems that are poised to skyrocket your portfolio, you need access to the right tools and insights. And that's where 𝗣𝗟𝗏𝗧 comes in. 𝗣𝗟𝗏𝗧 is the ultimate tool for uncovering high-value investments, providing you with the information you need to make informed decisions and stay ahead of the market curve. Imagine having access to the same level of data and analysis as Wall Street professionals, all at your fingertips. With 𝗣𝗟𝗏𝗧, you can analyze market trends, evaluate company financials, and identify potential investment opportunities with unparalleled accuracy. Our cutting-edge algorithms and predictive models provide you with actionable insights, helping you make smarter investment decisions and maximize your returns. Don't leave your financial future to chance. Empower yourself with the tools and knowledge to navigate the markets with confidence. But what sets 𝗣𝗟𝗏𝗧 apart from the rest? It's our commitment to providing you with a comprehensive suite of features designed to elevate your investment strategy to the next level. First, our real-time market data and analysis keeps you constantly informed, allowing you to track market movements, identify trends, and make timely investment decisions. Second, our in-depth company profiles provide you with a 360-degree view of potential investments, including financial statements, competitor analysis, and expert insights. And third, our personalized watch lists and alerts allow you to track your favorite stocks and receive instant notifications when they reach your desired price targets. No more constantly checking the markets. 𝗣𝗟𝗏𝗧 does the heavy lifting for you. We believe that everyone deserves access to the tools and information needed to achieve their financial goals. That's why we're offering you the opportunity to try 𝗣𝗟𝗏𝗧 for free today. Just click the link in the description and use my code Galore10 for an exclusive 10% discount on your subscription. That's right, you'll get all of 𝗣𝗟𝗏𝗧's powerful features at a fraction of the cost. Don't wait. Take control of your financial future and start investing smarter today with 𝗣𝗟𝗏𝗧. The markets are constantly evolving, and you need a reliable partner by your side to navigate the complexities and seize the opportunities that lie ahead. As we've seen, Warren Buffett's moves are a masterclass in navigating uncertainty. He's reminding us to stay agile, prioritize value, and always keep a long-term perspective. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Whether you're a seasoned investor or just starting your journey, understanding Buffett's strategies can provide invaluable guidance. Remember, the market rewards patience and discipline, so stay informed, stay focused, and never stop learning. Don't forget to hit that like button if you found this video helpful, and subscribe to the Stocks Galore channel for more insightful content like this. Until next time, happy investing.